10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
I did want to mention right off the bat that we have some great news, because just as we were going to that break, I was able to speak with our guest for today, and that is Steve Hayes of the Americans for the Fair Taxation. He's on the phone with us. We've been having, actually, throughout the entire break, had a great conversation with him. I think everyone's going to love this. Before we start, Steve, what I want to do is I want to give you the opportunity. Please tell us what is the fair tax? What is the Americans for Fair Taxation?
Well, the fair tax is a proposal that's been really in Congress since the late 1990s. It is a proposal that says we have a very broken and really not working for America way of collecting revenue for the government, which is based upon the income tax, personal and corporate, and it's based upon the payroll tax, which we all understand to be Social Security and Medicare. And it's a tax system that taxes consumption, because frankly, one of the things that I am amused by is when some commentator comes on and talks about a consumption tax, because any tax is a tax on my ability to consume and your ability, because unfortunately we can't print money like DC. And so if we have $100 and $20 is taken away in taxes, I don't care what you call the kind of tax, gas tax, income tax, Social Security tax, whatever, sales tax, you only have $80 left to consume. So it's a tax on your ability to consume. So what we do is we get rid of all those other taxes, and we tax at the point of consumption, not as opposed to before consumption, which the income tax, payroll tax does, because they take it out before you get it. So we say we're going to give you all your money, and when you go make a purchase, you're going to pay a 23% federal retail sales tax on new, underline new, goods, and on retail services like getting your hair cut, getting your car washed. Those are retail services. So you're going to pay that on all of them you get. We have it set up just like the standard deduction now for the income tax for a married couple is $24,000. Which means you have to earn more than 24 before you start paying income tax. The fair tax has what we call a prebate, a tax credit in it, which says, for example, a family of four is going to earn $32,000 before they start being charged the fair tax. Now, they're going to pay fair tax on every purchase, but every month they're going to get a check for the amount of fair tax that would be on, let's just say, $2,600 a month, working that through. So what happens then is that the family of four makes an earnings of, say, let's just say $30,000, and under the Social Security, payroll tax, income tax, they probably pay no income tax, but they would pay Social Security tax at 7.65% on the whole 30, so about $2,200 in tax, whereas under the fair tax, they would get all their money, they'd go out and make purchases, but they would not have been charged tax on that $30,000. So the lower income family is going to benefit because they're not taxed on their income until it gets to that point, and if they have more kids, of course, it's higher, because it's all based on the poverty level as determined by the Health Welfare Department. So you've got a replacement with the fair tax of a retail sales tax, just like your state sales taxes now.
Okay. I know there's a question that always comes up. Actually, I think there's one from the chat room as well, but One question that always comes up, Steve, and I think needs clarification. We've heard many people have heard about VAT tax or a value-added tax, which is a model
Right.
that's used out in Europe. And I know when I have conversations with people about the fair tax, I've talked about taxes in general, this always comes up. And and one of the big problems with a value-added tax is, well, it's just passed through from the corporation to the person. So you wind up sometimes being double or triple taxed, and it's been added into the price of the product by the time the consumer gets it. And it's very unfair, especially on different income levels. How is the fair tax not the same as that?
Well, it's a really smart question because a lot of people haven't really put it together that it is, in many cases, a value-added tax. They're simply adding it on to the retail price to you. I mean, that's the basis behind it. Well, the fair tax is a sales tax, just like the value-added tax is a sales tax. It's a flat rate, which unfortunately many value-added taxes are riddled with various different rates or deductions or fake deductions or whatever, that the industries have bought and sold in Europe. But they're both ultimately sales taxes. The difference with the fair tax is that none of that 23% is included at every step of production. It's only taxed at the point where it's sold on the retail basis. So it becomes very, very simple because instead of making all vendors and people who produce products of any kind, frankly, charge a value-added tax each time they do something, 90% plus of the operations in this country, along with all the individuals, never have to collect the tax. It's only going to be at the retail level. So I'm an attorney. If I do a will for someone, that's a retail service, I would collect 23% sales tax right there. It's very obvious, and it's big point, and the big difference is it isn't hidden in the price of what we have. And that's one of the great advantages a lot of economists have come to on the sales tax, is that it actually is very, very apparent to anyone making the purchase what the cost of government is. I mean, we've got all these arguments about, 90% pay most of the taxes or 80% or whatever. I mean, you see different numbers attributed to it. But what is true is that everybody is a consumer. So everybody in the country has an opportunity to see what the cost of government is multiple times a day through purchases. And I'm talking about people who are, my grandson who wants to go get something at the store and suddenly it's going to be 23% higher. He's going to see the cost go up. And he's 4 years old. But at the same time, he wouldn't see the cost or the impact of the income payroll tax for 15 more years. So we've got a situation where the sales tax is simple. It's collected at the point of sale. It's obviously much easier to collect today than it was even 5-10 years ago, because now we have probably in most states 90+%, maybe in one state I understand it's up to like 94% of the retail sales are made from about 8% of the merchants. And I'm talking about the big box stores, the Walmarts. I'm talking about Amazon. These things are making it much more efficient and easy to collect the sales tax. So the fair tax is out there to eliminate the headache from people, to eliminate most of the IRS because it's collected by the states who are already doing it in 55 or 45 states for themselves. So we piggyback on the mechanisms already in place, already very efficient, and we eliminate a whole level of bureaucracy, and we eliminate all of the complexity around the tax system and the uncertainty around the tax system. Because if you buy a building, it may be depreciable over 10 years. It may be depreciable next year over 30. If you buy a piece of equipment, same kind of consideration. Fair tax, if it's not for retail and you buy it, there's no tax. So you don't have this multiplication of taxes coming through, and that's why I don't think you'll find anybody that says prices won't be reduced anywhere from 10 to 15% of what they are today because of all the savings that are built in, all the costs that are built into the price of goods of paying taxes, because we all know
Right.
the cost is simply passed on to the consumer, and if you don't do that, you can't stay in business.
Well, true. Absolutely. Let me ask you this, Steve, because you brought up something, actually two things that I find very interesting. One, because we were talking about value-added tax, whether or not it's on the final product, not through the process, so it's not passed through
Right.
all the way. It sounds like, and I don't understand taxes well, so I could be wrong here, but the 23%, it sounds like instead of having it at each stage, that's why it's at the end on a retail product. But also, I would ask, a lot of people are going to hear 23%. They're going to lose their minds on this. To them, it's going to sound like a tariff. And they hear tariff, they hear bad for business, bad for trade. Can you address those two things?
Well, let's talk about tariffs for a minute, if you don't mind.
Absolutely.
And the tariff situation is fairly complex because you have countries that are trying to obviously benefit themselves. You have the Chinese, who have a tremendous problem of keeping their population, busy, keeping the prosperity going, and consequently they try to do what American companies used to do more so, which is create a problem so that nobody else can compete with them. In other words, they subsidize exports and they penalize imports unfairly. But the most basic unfair part of our economic system when it deals with trade is the income payroll tax, because if you are setting in all of our trading partners and you want to export to the United States, they all have value-added taxes, and they run from 10% to 23%. And what happens is if you produce a product at, let's just say in France, and you want to export it to the United States, what happens at the border is that the exporter is given a credit for all the value-added tax. I think it's 20% in France. All the value-added tax that's included in the price. And so let's say it's a $100 product in France, including the value-added tax. When it's ready to ship over here, it's an $80 product in cost. It comes over here and competes with U.S. products. Let's say it's a bottle of fine wine. It comes over here and competes with U.S. products, and it's able to be sold, except for transportation, let's just say 15% cheaper than it is in France. And we don't put a federal tax on it at all. We have state sales taxes, but we do not have a federal tax on it. Now, conversely, you take some wine that was grown, let's just say it was produced in California, and you want to send it all the way across to France and compete. When you get to the border to ship it out, the exporter doesn't get any money back because the income tax and the payroll taxes are A, not easy to compute how much was on it, and B, against the GATT rules for how you can tax and do rebates. So what happens is that $100 item here, and let's say it was 20% tax as well for ease, that extra $20 of tax is still in the price when it leaves our shore. It gets to France, and guess what the French do? They add their 20% value-added tax to it. So now we've got our product 20% higher than the same product in France.
Right.
That's a lot of the reason why we have such a trade balance problem, is because we are subsidizing imports and we were penalizing exports. Well, when you do that, where do you create the jobs? You create the jobs where it's cheaper to make the product and you can sell more of them. And even though there's lots of crazy rules in France on employment, and maybe the French don't work as many hours or whatever,
True.
they still have oftentimes an opportunity to compete with us much better for France because of the rebate at the border for exports and the addition of the value-added tax for imports. So what happens then is you still have, yes, does France penalize us? Yes. Can we do anything about it under the General Agreement of Tariffs and Trade, GATT? No, because they are using a tax that's used by every single one of our trading partners. We're the outlier. We're the only one that is stuck to this ridiculous tax system we have. And part of that, and maybe a lot of it, is what's happening when we see the growing amount of evasion, meaning people who are not paying tax under our income payroll tax system. Because in the next 10 years, an article or study by Dr. Richard Cibula, it's on our website at fairtax.org under research, he says that we're going to have $9 trillion of evasion. $9 trillion over the next decade. Ironically, that's almost enough to balance the budget. So we've got a lot of people evading it, and evasion means not that you're taking advantage of a deduction, but simply you're either exaggerating deductions or you're not reporting income, or a combination of the two. So you've got a huge problem with our system. It makes us much less able to compete. Plus, it is so easily evaded that the audit rate now, if the actual number of audits in a country of 300 million, where an IRS person goes to your door or you go to their office, is 300,000. 300,000 out of 300 million. And so you've got people who believe they can get away with this, and they're right, because like I talked to some younger people who said, yeah, I don't report this, or I exaggerate this, or I write off my apartment as my office or whatever. And, yeah, I've got a chance of being caught, but it's like getting hit by a bus. And they're almost right. So we've got a broken system. We've got a system that punishes U.S. producers. And we've got a system that absolutely encourages people to, I'm just going to say, cheat, to not pay their share.
Yeah,
So that's all eliminated by the fair tax, because it's very difficult to cheat when you're buying things at a big box store.
Right.
Or Amazon. It fixes a lot of the problems with our trade imbalance overnight, because it makes a 23% difference.
Well,
and what happens is that it forces our trading partners to, and a lot of our trading partners, frankly, are U.S. subsidiaries who are taking advantage of Europe's ability to export here with no tax. And so it makes it much more level. It makes the U.S. a much more appealing place to have, manufacturing again. And all of that leads to more jobs, because what's good for workers is when they're scarce. When you can't get enough people, you have to pay more money.
Well, true. Always true. Let me ask a slightly different question. And I love the fact that you give such detailed questions, answers to these questions, because this is a big deal, and it makes a big difference to the nation, both because of our debt, because of our need for trade, and for our economy. But I want to also address, because I know some people have been paying attention, and I think it was back in 2012 that Herman Cain came out with his 9%. I think he called it a flat tax, or he may have called it a fair tax. I don't recall.
Yeah, he had all both involved. Yes.
Right. And so he had that, and that was 9%. And I believe Rand Paul as well as Ron Paul have come out with similar statements to what you're speaking about. I think their programs were slightly different over time.
Yes, they were based on the income tax. They were talking about making the income tax more easily understood and complied with.
Right. So there are differences here between those. And obviously you're familiar with them. So,
Yes.
and I know some people confuse these, especially since we're going to 2020 and obviously the next election's coming up. This may be something that could be a conversation in 2020. What's the difference between those programs and yours?
Well, the major difference between the both Paul's program and Steve Forbes, who I've been on panels with in the past, the main difference between their proposal is that they're talking about basing it on an income tax, payroll tax system. They do not eliminate funding the payroll tax through, payroll deductions. They leave that in place, and that, frankly, is the most regressive tax system we have because, as you know, the payroll tax starts from $1, whether you have one child or 3 children or 15, and whether you make $25,000 a year or $125,000, you're going to pay the same rate, and it stops at $125,000. So one of the problems with the payroll tax is obviously the people that it says it's going to help the most are people who are being penalized the most. And the second problem with it is obviously when you base it upon a growing number of retirees, you're now down to 2.5 workers for every retired person. That's why it's going to go broke unless the rates really go up or benefits go down. So they keep that in place, but they base it on the income tax. And when I was on the panel with Forbes, he used to get upset with me because I'd always ask him, I'd have a copy of the 1913 tax return, and I said, isn't this sort of what you're looking to do? And he would have to say yes, because it was pretty much a flat tax. And he would then I would say, okay, here's this 1917 return that Woodrow Wilson put through, and it goes up to 70%, and there are different layers and different deductions. But Steve couldn't really dispute that, because if he were the emperor and could put it in place and it would stay that way, then probably it made some economic sense, because he gave a lot of benefits for savings and other things. And economically, it probably makes a lot of sense. On the other hand, we know what Washington's going to do. They're going to start going after it. That's why there were so many thousand changes after the 86 reform.
Of course.
They get paid in the swamp to whittle away and take advantages away from one group and let the burden fall on others. Unfortunately, the burden typically falls on you and I, Michael, because
almost always.
It's on the individual that it really falls. And they don't seem to mind because they're getting paid to protect Industry A or Industry B, and that means that we're subsidizing Industry A and Industry B, and we're supposed to be happy about that. Well, that all goes away with the fair tax because, again, you pass a tax that's uniform, that's applied across the board to all spending at the retail level. And it's only on new goods. You don't get taxed 3 times when you buy a used car. You get taxed only when it was new. So you've got a fair system. You've got an economically successful system, meaning that there are no economists now that argue that the growth of the economy wouldn't be much better. You've also got a system that encourages what our parents taught us, which was to save. You only get taxed when you spend. You only get taxed when you spend on new goods. You basically have the ability to invest, and instead of being punished when you invest by having that money taxed when you earn it and then taxed again on whatever return it gets, it actually grows tax-free, and it's not taxed till you spend it. So we're going to have a lot of people coming into this country with foreign investment who want to take advantage of the fact that they're not going to be taxed on it like they would in their regular country. But the advantage to us is, look at all of the growth and jobs that are created by this investment. It leads to more productivity. Productivity is like arm stock. It's just walking step by step with wage increase. So we're going to increase wages. We're going to make labor much more valuable. And we're going to have a lot more prosperity, because we are now treating the United States as where manufacturing can afford to take place and where good jobs can afford to be created.
All right. It's very interesting to hear this. There's so much information here to grab, and I know people should go to, and I've shown it before, the fairtax.org. That's your website that people can go and look at the research, learn more about this and how it applies to them and or their community, like only on new goods, not used goods. I know the chat room have brought that up. So that makes a big difference as well. And that's I'm sure something of interest for a lot of people, especially in the world of eBay and Amazon Prime and all that. But let me ask two questions. And we're short on time. We've got about 5 minutes or so. But Steve, let me ask first, especially looking at 2020, at this moment, do you know are there members of Congress, whichever party, and maybe both parties, maybe neither, I don't know, or maybe one of the third parties, are there members of Congress right now or in the White House that are proponents of the fair tax?
We've got over 45 sponsors of the bill in Congress. So there are members. We've got a president who said some very good things about the fair tax before he was elected. In fact, we know he knows about it because some of his campaign advisors were used to work with fair tax supporters. Sarah Huckabee Sanders' father, Mike Huckabee, is a big advocate of the fair tax, and often on his program that he does now, or the programs he's done, he'll have a little monologue where he endorses the fair tax. He'll take some outrageous situation that happened, and he'll say, look, we get rid of all the silliness if we go to the fair tax. So does he know about it? Absolutely. Does he feel at this point that he has the ability to do it? No, because unfortunately, when he went into Congress, the swamp, Mitch McConnell and others, Paul Ryan and all, said, we've been doing it our way for a long time, and you're not going to be able to come in and upset that. He barely got tax reform at all, because and he had control of both houses, but he barely got it because he was considered an outsider in that. Now, if he does run and is reelected, he's going to probably have the ability to say, okay, now we're going to do things the way I believe they should be done. And I think he's going to have, if he gets control of both houses, his party, a real opportunity to do things like this, because he knows about it. He said good things about the fair tax. He knows the present system is totally broken. He knows that there's a lot of evasion. I mean, these are all things he said. So what we're doing now on our side, and what we would really like other people to be looking at, is a way to come back when these candidates start running around and just ask them to defend the present system. They're not going to be able to do it. If you have your facts, they're going to try to ignore you. They're going to try to laugh at it or whatever. But that's the problem that they have. It's a system that can only be defended if you're willing to say the American people don't matter. What matters is lobbyists who give money to us getting paid.
Okay.
And I think it's as simple as that, and you're not going to find any of them admit that, even though I'm sure they all believe it's true.
Well, getting politicians, especially elected politicians, to admit anything sometimes can be very difficult. One thing I would ask, and I haven't, and we've got about a minute, but it's a simple question. Are you seeing support from the Democratic, the far left, the Democratic Socialists, AOC, Alexandria Ocasio-Cortez, any of those groups, or any of those, or is it just Republicans and fiscal conservatives that recognize this could be a solution to our tax issues?
Well, I think the answer is that Ben Cardin, who's a senator from Maryland, and who's certainly not considered very conservative, has come out with a plan, it's on his website, where he actually has a 10% retail sales tax, an income tax that starts over $100,000, and a value-added tax. So when he came out with that, I met with Ben a couple of years ago, and when he came out with that, it made getting in to see Democrats a lot easier, because now one of their leaders, because he actually is a thought leader for them, came out with this plan, and I have it on pretty good authority that Hillary, if she had won, was going to propose something like this. So yes, there is talk, because they are starting to see this. Where Ben and I parted company was that he felt like that he couldn't get rid of the payroll tax because it would be just too high a rate. He couldn't have a 10% sales tax. He'd have to have a 14 or 15% or 16. He just didn't feel that was going to work. But that doesn't mean that the ideas aren't out there, and it doesn't mean that more people are starting to see a problem. But my thing, Michael, is none of them want to give the other side a win. In other words, they don't want to solve the problems between now and 2020.
True.
Because they want to be able to point to Trump, if you're a Democrat, and say, boy, he's really messed this up. And they don't want to let him have any successes going into 2020 that they can avoid. That's why Schumer was publicly boasting about the fact that he had torpedoed some of the, the things that were in the Tax Reform Act so that Trump wouldn't be able to have as big a win. I mean, that's so evil in my mind, because he's saying he doesn't want to help the American people. He just wants to beat Trump. Well, that's the way they think up there.
Sadly.
And that needs to change.
I wholeheartedly agree with you on that. See, we can all have differences about how we want to help America, but we should never actively not help America because of our differences. That's just, I agree with you wholeheartedly on that. It's one of the things I rant about on a regular basis. But I do want to thank you, Steve. We've had a lot of conversation, and you left it off on something that I would love to pick up on. So we're going to definitely have to talk again more and go into some of that, especially as 2020 develops, maybe in the summer, talking more about what we're seeing, especially as we see more of who's actually going to be running and what they're going to be running on, if that sounds good to you.
I'm looking forward to it, Michael. I've enjoyed it, and I appreciate your giving me the opportunity to talk about this, because I think it is something that when people learn about it, they begin to see that it makes sense, it's something that we should be doing, and they ask, why is it not being done? And I just tell them to follow the money.
Always. That seems to always be the answer when it comes to politics. All right.
Yes.
Steve, I thank you for the conversation today. As I said, I'll shoot you out an email. We'll stay in touch, and we'll get you back on as soon as possible. But I want to thank you for taking the time here today and spending a little extra time than we expected. Oh, by the way, you also got from the chat room, you got a compliment. One of the individuals there mentioned that you look cute. and
Thanks very much for having me on. I look forward to doing it again.
Absolutely. Thank you. You have a great day.
Okay. Thank you.
All right, folks. And that was Steve Hayes, who's with the Americans for Fair Taxation. And you can go to his website, which is thefairtax.org, and you can learn more information about it there. I thought it was a very interesting conversation on the subject, and really getting a lot of different viewpoints. And hopefully, I hope you enjoyed the questions I asked, trying to clarify some of the things that sometimes is very confusing about flat taxes. Has it been offered before? Who's supporting it out there? How does it affect and affect business? And how does it work? And whether it could be good for the economy or not. These are all important questions, and we need to ask them. Now, I know we need to take a quick break, and I'm going to come right back.